What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a DBGI technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video so that you and a friend could consider join our trading community, ARCab. Before we get started, you guys, please consider if you don't speak English, click on this settings icon. Click on the subtitles menu and make sure that English auto-generated is on so that you can go back into that same menu and select auto-translate so where you can see different languages for you to choose from. Anyway, one more thing, you guys. I've noticed alongside some of the members in the Discord community that there are impersonators of me, and please make sure that please make sure to know that I will not send you a message first. I will never message you first. I will never ask you for your bank information. I will never ask you for your wallet information. If you feel the need to verify that it is me, you can always reach out to me on another platform like Twitter or here on YouTube, or you can even message me on the Discord on the community server, and I can go ahead and verify for you. But please just know that I will never message you first, you guys. But with that said, let's go ahead and flip the script and get right into the charts. This is DBGI on the daily. This is for Digital Brands Group. Okay, so this was actually asked from the Viking Gorillas, and they are asking me to take a look at this ticker to see if there's any potentials. But you guys, in the daily chart, we are noticing right here a very bullish pattern, and this pattern is very much seen right now all through the markets, even within the larger indices like the SPX. You can actually see these patterns start to form, and we're range trading in a downtrend, you guys, because we have a massive indecision as to what's going to happen with CPI data. Are we going to continue raising rates with the Fed? These patterns kind of reflect that indecision and that angst from traders, you guys. So let's go ahead and take a look at some details right over here, you guys. These formations tend to realize to the upside after what I call the golden rule of three. You will know that I speak about that pretty often if you listen to me or if you read my threads on Twitter. So we have a test 1, 2, and 3 already confirmed. Usually after the test 3, short sellers know to open up positions right over here so that they can ride the capitulation event before us attempting to make a true breakout on test number 4. Now, if we just take a look closer right over here, you guys, I am noticing that we could potentially be building another formation. This is terrible, you guys. It's just formations on formations over here. I usually tend to look for formations in case the ticker is following market geometry. So in this case, it looks like we are forming a sort of a descending, or no, you know what, a falling wedge. It is a triangle, and it does have a price objective for us to look at. And there's actually a very important thing for you guys to know within this triangle is the print of this daily candle at the top of an uptrend is usually bearish. This is called a hanging man candle, you guys. So that usually presents kind of a danger to the bulls. So if it is that case, there's a potential that we can raise 6% on the following day candle all the way to this resistance from the triangle and potentially fail it. And the resistance of this triangle is actually confluent with a knot 786 at 909. From our Fibonacci retracement tool right over here, you guys. And you can also see that we can use right at this level the 50-day simple moving average right over here. So actually, I think that may be this is the 30-day exponential moving average, and we could potentially use that right there for resistance, you guys. It is confluent with our knot 786 and our resistance range of this triangle, you guys. So if we were to touch this and then start retracing, we could actually retrace for a couple days, you guys. So now the good thing of this candle is that it has broken market structure. And what I mean by that is that these candles over here have made a low and then a lower low. And this candle has printed, it has not printed a lower low. So there is the potential to where we can touch this and then come back and test a few. There's actually a few targets right over here, you guys. So we can test the knot 382, 752, which is confluent with the resistance of both these candles and the supports of these candles right over here. And there is also this would be possibly, potentially, guys, this is raw price action. Please just know that there's no data backing this. This is only based on what I'm seeing on the charts. And there is also the knot 236 at 696 that can be touched, implying that we would make an ascending trend right over here. Another way for you to be able to see what that potential target could be is that if we were to use these two candles, we can see a potential drop, on the next day or two at right here at the knot 236. It's suggesting the knot 236 right there. But if it was the next day to where we make that low, it would be in between. It would be in between the knot 382 and the 236. But for making these trend lines, I wouldn't put too much weight on, you guys. So just know that there is a potential bearish signal fired off right here, you guys. Now, this larger formation does have a price objective for us to look at, and that price objective just so happens to land at right at the resistance and the start and the genesis of this formation. So this is a massive gap that we have over here, you guys. I'm not following the fundamentals of this whatsoever, but this, I don't know if this was probably some type of a reverse split, or really this thing sold off that much. But we're talking about a 73.52% gap. This is 2767 to 4802. This is ridiculous, you guys. So, and with some bearish action, we can actually pressure the 200-day moving average, the simple moving average, down just a bit to be in confluence with the resistance of this enormous gap. The price objective for this formation is the genesis of the formation. So we're looking at 2767 at an overall take profit for or price objective for this formation. One more thing within this chart, this triangle does have a price objective. Now we take that price objective by measuring it from the hypotenuse to the lowest point of the triangle and taking this trend line to a point of breakout. I assume that we can, trade here for a couple days and then break out. Now, the reason why I'm choosing this area right here is because this would be the earliest stage in where we can break out of this formation right here, and this would be the 70% mark. Usually these triangles tend to break out at about 70-75%, and we can see an upside move right to the 286 golden ratio. To the 2618. My apologies. This is the 2.618 golden ratio from the Fibonacci retracement tool, you guys. And also, if we just draw a trend line right over here, we can actually see that. Let me just make a quick little adjustment for it to land right at. I'm a stickler for these things, you guys. I tend to be really precise. You can see that we've used this as a form of resistance, and it's very, very much. These are daily candles, you guys. These are every single day. We were looking at resistance before it failed it. You can see right here resistance, 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 failed, and you can also see right here that we pretty much touched it perfectly for support, came back for support again, and then eventually failed it and started using it as resistance. So this is one of our inflection points as well, you guys. The 2.618 could be a likely target for us to first touch before us retracing back and testing our newly converted resistance into support from our larger formation. Okay, so let's go ahead and move on to the next chart, you guys. I know this one's taking a little bit longer. I actually looked back in the 30-minute immediate short-term time frame for DBGI, and I noticed that it is following market geometry. This ascending channel usually tends to be a bearish signal, in which case it realized its true nature and it started a downtrend. Now, in doing that downtrend, it actually formed a reversal trend pattern, and this is in a smaller time frame, just like this formation right here. It is a descending broadening wedge, and it did its golden rule of three. It did 1, 2, 3, and then break out on the 4th after the capitulation event, you guys. And now it has started to form. It did form a bearish signal, and this is an ascending broadening wedge. This is incredible how much angst and just nervousness happening within this asset. These formations usually signal nervousness. So this is very particular here, you guys. Check this out. So we have one test right here. We have 2, and then we have our third test. Usually in a bearish setup, the third test of the resistance is the one that's going to make it fail towards the bottom. And usually the take profit for the third test failure is the bottom of the bottom of the formation itself, which would be right over here at 604. It, however, recouped the channel. It recovered it, and it's looks like it's almost failing the support. This is the support of the ascending broadening wedge, you guys. So right now, it's starting to print all these long wicks. Usually that's not a good signal, or it's not a good sign, you guys. But there is the potential to where we can use this one more time as support, and possibly start making a new higher low. As you can see, we have a higher low right here. I'm sorry, this is a higher high, right? But this is our highest point. We have a higher low. We have a higher low, and then yeah, we could see this forming. Now, in doing this thing that's happening, another formation that is very important to be caught early on is forming. This is a right-angled descending broadening wedge, and this is a reversal signal. 57% of the time, this does resolve to the upside. And now it's confirmed after 2 touches of the resistance, and it looks like we just got that second touch. So for that, based on this chart right over here, guys, testing this upper area right here is, or possibly to the 50-day moving average at about 1035 could be in confluence with us testing this area right here, 954. Let's just go back and see what 954 is. 954 could be, let's see. So you're looking at 938 right here. 954 is right up here. Yeah, it could potentially just touch the 954 area and then fail the triangle. So that is a possibility. So for us to go up right over here, you guys, and then continue our descent into then testing the second test of the support, which would then confirm the formation itself. We need 2 touches of either. Of both. The resistance and the support in order for us to verify that we are within this channel. Now you can see on this fib ratio we are using. Pay attention to, you see how the cursor has this horizontal line. Pay attention to the candles while I'm pointing at this right over here. So this is the 618, and you can see that we are using this as a form of resistance, and it's not letting the price kind of go through. And I mean, it's pretty clear, you guys. There is a potential that we can break for this top end right here in nervousness, and then just capitulate towards the downside. Let's go ahead and grab a bias and direction. This is the 12-hour RSI that we are looking at right over here, you guys. So I noticed that there were 2 drives of bullish divergence right over here, and that happens when we're making lower lows in the price action while the RSI is making lower highs. So we see right here that we had two large 12-hour drives of bullish divergence in which we could have already resolved by making this upside move. I mean, this upside move you're looking at about, let's see, you're looking at about a 72% move to the upside, you guys. This is pretty significant, and I would respect what these bullish divergences did. Now, in doing this move to the upside, I found 2 drives of hidden bearish divergence, you guys. So this is also in accordance to what we're talking about with us finding potentially some downside after some upside, some immediate short-term upside, you guys. So this has confirmed 2 drives by the close of this candle right over here, you guys. So we're starting this candle now. So now let's look at a multi-pane so that we can see a bias and direction for a few time frames right over here. We'll do this real quick. I know this video is going a little long now, you guys. My apologies. So let's see the 30-minute immediate short term. It's no bias and direction. We do not want to consider anything within this section, you guys. Also, new listeners, please listen up. This is a regular RSI setup right here, you guys. I have it split in 2. This is the bullish control zone, and the bottom half is the bearish control zone. The inner workings of either zones is the weakness percentile, and the outer workings of it is the strength percentile. So this is bull strength, and this is bear strength. So there's no bias and direction on the 30-minute. Let's move up to the 2-hour. This is the bi-hourly RSI, and it is also kind of just facing straight, you guys. There's also no bias and direction on this, so likely we're gonna find some. Oh, sorry, that was not the bi-hourly. That was the 12-hour. So, okay, yeah, this actually now makes sense, you guys. You can see that we're using the moving average. This pink line is the moving average, and the purple is the signal line. So we're using the moving average as a guide to the upside. Now we're sitting now at the deeper ends of the bull weakness percentile, which means that we can actually touch potentially right up here, you guys, into the bull strength, and this is, we're talking about a bi-hourly right here, you guys. So that goes in confluence of what we're talking about, to moving in the short term to the upside, followed by some downside. I assume the 4-hour may be similar. Okay, yeah, so the 4-hour is now in the deeper areas of the bull. Yeah, this is the bull weakness, but it is pivoted slightly to the downside, you guys. We're getting a little bit of a hint from this moving average, and it is slightly to the upside. There's a lot of indecision in this, you guys. I would practice a lot. I would practice very carefully in this. The 6-hour is also neutral in direction, you guys. Let's go ahead and move up to see if we can get something maybe on the daily. We already saw the 12-hour. The daily RSI is suggesting a continuation to the upside, and it has made a bullish move above the moving average, which that's good, you guys. So yeah, by daily is suggesting upside. It has now cleared the bear strength percentile. It's now in the bear weakness percentile, you guys. So there is some upside to this, and potentially in the next trading, in the trading session after Monday. So definitely watch out with this, you guys. I'm not a financial advisor. Please take whatever I do show within these videos as a form of entertainment. Please do your own DD, and we'll be okay, right, you guys? But I would not consider entry just yet into this, you guys. My mentor actually told me that when there is indecision or you can't find an edge on your trade, don't trade it. Sometimes the best way to make money is to keep the money, right, you guys? So with that said, I think this is a pretty good place for me to leave off the video. I'm going to leave the links in the description below for you to consider joining the ARCa trading community, you guys. The Twitter, you please send me a follow. Please comment below. Tell me what you think of this analysis. And with that said, I wish you well, and I wish you actually a good rest of your weekend, and I'll catch you at the bell on Monday. Adios.